Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 30th of January. Bank of Japan, playing the waiting game. Central banks take center stage this week, with the first one being the Bank of Japan, which will announce its policy decision during the Asian morning Tuesday. Expectations are for the officials to keep their stimulus program unchanged. Economic data have been lackluster since the Bank of Japan last met. Underlying inflationary pressures picked up somewhat according to the latest CPI data, though inflation remains subdued overall. Even though such prints are unlikely to be very reassuring for Bank of Japan policymakers, they are decent enough to not warrant any immediate policy action, in our view. After all, the bank switched to a yield control framework only in September, implying that it may want to examine more data under its current policy before considering to alter it. We believe that the focus of this meeting will be on the bank's assessment of the Japanese economy and any signals with regards to the future path of policy. Recently, there has been some market chatter regarding the possibility of the Bank of Japan scaling back its asset purchases somewhat. We believe that it's far too early to discuss the prospect of tapering, and we think that the Bank of Japan will avoid commenting on such an action. Bearing this into account and the aforementioned softness in the economic data, we expect the Bank of Japan board and Governor Kuroda to maintain a dovish tone overall, which could lead to a negative reaction in the yen. Sterling yen traded lower during the Asian morning Monday after it hit resistance at 144.80 on Friday. Given that the rate is printing higher peaks and higher troughs above the short-term uptrend line taken from the low of the 16th of January, we consider the near-term outlook to be somewhat positive, and we would treat the recent retreat as a corrective setback. If the bulls are strong enough to take control again soon, we would expect them to aim for another test near 144.80. A clear break above that level would confirm a forthcoming higher high on the 4-hour chart, and is possible to open the way for our next resistance of 145.60. Elsewhere, the US dollar opened with a negative gap against its major counterparts today. The move may have been fueled by the latest executive order from President Trump, who introduced controversial immigration restrictions for people traveling to the US from 7 nations. The weaker-than-expected US GDP data for the fourth quarter, released on Friday, may have contributed to this dollar weakness as well. Despite this soft start of the week, we stick to our guns that as long as President Trump is seen as fulfilling his pre-election promises, the market could continue gaining back its optimism that he will follow through his fiscal pledges as well. This prospect, the fact that most US data this week are expected to show further improvement, and an overall optimistic FOMC on Wednesday are all factors that could support the dollar in the near term. Euro-dollar opened with a gap above the resistance, now turned into support barrier of 107.05. The price action remains above the upside support line taken from the low of the 3rd of January, but as we get closer to the key resistance obstacle of 108, we prefer to remain sidelined, as the bears may be waiting to take action near that zone. What's more, the price structure on the daily chart has been lower peaks and lower troughs since the 9th of November. So as long as euro-dollar is trading below the 108 resistance zone, we would treat the recovery that started on the 3rd of January as a corrective phase. As for today, we get Germany's preliminary CPI for January, just 1 day ahead of Eurozone's print. Expectations are for the nation's inflation rate to have risen further from the previous month, which could raise speculation that the bloc's print may follow suit, and thereby bring the euro under renewed buying interest. From the US, we get personal income and spending data for December. The forecast is for personal income to have risen notably after stagnating in November, while spending is expected to have accelerated. This could be another set of data that indicates that the US economy finished 2016 on a strong footing, something likely to be pleasant news for FOMC policymakers. As for the rest of the week, on Tuesday during the Asian morning, the Bank of Japan will announce its policy decision, which we already discussed. In Eurozone, the preliminary CPI for January will be released. On Wednesday, the highlight of the day will be the FOMC rate decision. The forecast is for the committee to keep its rate hike powder dry, so the market action will probably come from the phrasing of the statement accompanying the decision. We expect an optimistic tone overall, considering that there has been further economic progress since the latest gathering. The ADP employment report for January is also due out. On Thursday, market participants will have their gaze locked on the Bank of England's first Super Thursday of the year. We think that the focus will be on the official's outlook for inflation following the latest acceleration in both the headline and core CPIs. On Friday, the US employment report for January is coming out, and expectations are for another month of decent employment gains. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.